Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at crude oil on a range open after a pretty strong trend morning. The European session had a lot of bearishness, as we can tell from this gap down from Friday, but when we came in today, we really weren't seeing that follow through. We definitely had some more weight to the downside with some pretty good bearish moves, but we weren't seeing that good continuation like we had in the European session. So we have to switch our thinking a little bit and look to buy low and sell high with a little more emphasis on the selling high side of things. Now, Friday was mostly kind of a range day as well. We really didn't go anywhere in terms of movement. You know, we opened here and we closed here. It's a relatively weak body considering all of the wick that would have been on the daily chart on both sides. So a relatively indecisive Friday. And then we open up with this big old gap lower. Now, noting the last candle of the day from Friday was bullish but weak, right? That doesn't tell us that buyers are stuck here. That tells us that sellers probably took some profit at the end of the day, but sellers are likely still in this move. So when we gap all the way down here coming in from the weekend, they're probably going to take some profit. We get a first candle here, relatively okay. You know, you've got wick on the top, wick on the bottom, but it's a pretty big bar itself, so that may get some sellers more enticed to try to sell a little more, but likely a lot of the sellers are still short from Friday. We open up and we can see as soon as it went underneath that bear candle, they took profit. So knowing that the sellers from Friday are taking profit, we're likely going to get a bounce up, and this is where we start getting some semblance of a range, because buying here means that we're looking back up towards the highs. If we get back up towards the highs and we see failure, now we have confirmation of a range, and that tells us we need to buy low and sell high. We get a drive higher here, nice move up. They finish the job off right at the top there, and then they drop lower, heavily bearish candle right here. And that shows you, yeah, the sellers might not be done yet. They're looking for another leg, and that type of candle is no joke. So you want to pay attention to the downside, and that's a beautiful reason to sell. But now you start running into the problem of, well, wait a minute, we just went low, and then we went high, and now we're going low again? That's pretty much the definition of a range, so there's probably going to be buyers underneath, and they're not going to believe this breakout from the sellers. So the sellers try breaking out, and given that wick at the bottom there, buyers didn't believe them, and they start trying to go against them. So, you know, if you're aggressive on your orders, you could easily try to buy down here, going against that breakout, knowing that it's not that great of a breakout, probably going to fail given the range sentiment of the day. But if you waited, you have a nice little push higher here, several times off the lows, and you can see right when the bears weakened up, right there, that candle, all the wick on the bottom, all the body towards the top end of the candle, and as soon as that forms, the bulls come right back in. It's a weak bull candle, but in context with that bear candle, following that hugely bullish candle, you're probably going to get a correction back up into the range, and that's a beautiful reason to become a buyer for the short term. We push higher, we come near the moving average, but we're right back inside that original range again, and this is where sellers are going to begin looking to sell into it again to drop the market farther down. And this was actually the trade of the day video, so make sure you watch that. But a beautiful bear candle right in the face of that bullish attempt, and in the context with a very bearish market, everything pointing to the downside, but kind of a range, again, more emphasis on the downside. You get a good reason to short. That is a beautiful reason to short right into support, and that's exactly where the market went. Now, it's still a range, so yeah, you could definitely just buy support blindly and assume that it's going to go higher, but the problem is with a range, you don't generally want to be the first one to the party. We talk about that a lot, especially in the face of that amount of selling pressure. You're probably going to have sellers that give it another shot, and you can see they did, but when they fail to get through that level once again and turn around into a bull market, or at least a bull candle, although it's weak in the context, this is actually a really strong buy opportunity to try to get that move back up towards the top of the range before you find sellers once again. And if you waited and didn't want to take that candle because it was a little bit weak, when you get that huge candle right there, that's your sign to get in because you're going higher. And just a beautiful run back up to the highs, and it doesn't look like they're done yet. So a gorgeous example of combining market psychology along with technical analysis, starting off the day with a big drop lower, going into a range, getting confirmation of the range, and then fading the range accordingly. So if you have any questions about it, feel free to send an email in. But otherwise, hopefully you learned something, hopefully you found it interesting, and we'll see you next time.